Hello, guys. Good morning. I hope that everyone is doing fine. And I just want to bring to your attention that what we had earlier on done in the pre-market analysis session has actually started unfolding very beautifully. And if you're keen, you would have been able to catch a very beautiful move on the pound during this London trading session. So, if you can recall, I was having this zone for a bearish breakup block, and price now has traded into the zone, going down to the 15-minute time frame. We can see what has actually happened. I told you all that I was expecting to see lower prices going into the week. Now, this is a very beautiful delivery that has occurred, whereby Asia had got a tight movement, and now London offered a massive expansion. The entry model that one would have used is found on the 5-minute time frame, whereby we are having this price action here, which was quite lethargic at this moment in time, but it finally gave up the ghost. So we can look at what transpired and the model that presented itself. So remember, initially I told you that I preferred trading the pound over the fiber. So before doing an analysis of what happened here on the pound, if you look at Euro USD, you can see what was happening in relation to the Asian range. Euro traded higher and came for these buy stops here, which were above the Asian range. But looking at GBP USD, you can notice what was happening. The pound was actually doing the exact opposite of what was happening on the Euro USD pair, meaning that it was giving us a failure swing. So that is a cracking correlation, indicating that the best pair to engage at that moment is the pound, because it is failing to take this high, meaning that it has shown weakness, and if you engage it, the delivery will be very fast, and it has got the speed that we require for a beautiful move. Now, you may ask yourself, okay, you had known the drawn liquidity, so which would have been the best model to use in this scenario? Remember, in relation to the theory of time and price, we normally come to look for our setups between 2 a.m. New York time and 5 a.m. New York time. So if a model is presented, I told you that we don't hesitate to engage. And looking at what transpired in today's London trading session, we can see that on the 5-minute time frame, once this failure swing occurred, we had got a very beautiful displacement at this level. The 5-minute itself was sufficient for one to come up with a beautiful trading idea. So that zone is treated as a market structure shift. There was that massive movement, then the candles closed below. And remember that we also have this internal structure here. That buy side liquidity was taken out. Then after that, what was taken out? Price displaced to the downside, leaving us with a bearish breaker block. So you must understand that a breaker block is one of the most powerful PDRAs in the ICT concepts. So it normally supports price very well, provided that you are in the direction with the order flow. So price traded into the breaker block, and a very powerful combination always is that if we have got a fair value gap and a breaker block, that is what we would refer to a unicorn model. So this was the fair value gap, which also presented itself after the massive shift in structure here. So that was all you needed to come up with a beautiful trade execution. So our entry is to be at this point, at the open of the fair value gap. Then stop loss, put it somewhere around here, or just the safest place to put the stop loss is above this swing high. That is a 9 pip stop loss, targeting a 1 to 3 RR. A 1 to 3 RR would be somewhere here, that is 27.5 pips. But we know that the most beautiful draw would be the previous day low. So at 1 to 3 RR, you take out some partials, then leave the rest of the positions to run towards the previous day daily low for full TP. So this is all you needed for today's trade, and it would have been a very beautiful trading session for you and bagging the profits in a very short time. So this is what we normally use for very beautiful entry models. A breaker block, that is a bearish breaker. The schematic would look like this. Price prints out a high, then comes out and takes that high, displaces, then trades back into the zone. So this is what we normally refer to as a bearish breaker block. So the last bearish candle, which is at this zone, is what I call the breaker block. That is all you need to know. Once price has taken a pull of buy stops up here, which we would call buy sell liquidity, then we wait for a massive displacement or change in character. Then price does a market structural shift at that point, leaving us with this bearish breaker block. Then it trades back into the zone. So this is all you need to make very beautiful entries. Though there are a lot of models, but as it now, this is what presented itself during the London session. So that was just a quick one to do an analysis and just recall what has happened. So until next time, have a beautiful day.